If you pull up the line chart, let's start with the line graph of how markets have performed all day and opened fairly okay, quite positive. The news that a set of RBI's proposed guidelines will hit profitability of project financers saw the mood dampen a fair bit. The day's trade has largely been about the corporate numbers, and we've seen that in individual counters, but overall definitely a sense of hesitation coming into the markets. And if you see the advanced decline ratios and you will see what kind of a trend line we've seen all day as well, that's absolutely clear. Your declines outpacing your advances nearly 1:3. Now, look at the change which has happened, I would say, in the first half an hour, 40 minutes of trade opening, and that gap only widening. Markets now near their day's lows. Before I get to the heat map on the Nifty 50, I just want to pull up the sectoral indices to give you a sense of what is hurting and what's actually working, even in a market like this. The story is all about reality on the upside. The positive side is all about the reality. Godrej Properties, actually the whole pack completely firing on an otherwise tepid day. IT is doing fairly well. That's a TCS and others which have been doing okay, but here's where the pain really resides, and it's not just an REC, PFC that have been hammered across the board. PSU banks have been, and that index now about 4% down. Let's pull up the Nifty heat map to give you sort of a closer look at where the pain points are and what's really been working. Titan is the biggest loser on the Nifty, nearly 7.5% down. Now, the results is the trigger, but it's also the concern that the increase in gold price is going to hit their margins. We've spoken to the Titan management. You will hear from them later, but Titan definitely a pocket of pain. On the other side, look at what's happening with Britannia. Britannia's had a supreme run-up today. Again, results weren't great, nothing to write home about in that sense, but you've seen that kind of a pain in all FMCG players, and the overall situation remains the same, but Britannia done phenomenally well. Stock of the day in that sense, I would say, is still Kotak Mahindra Bank, because they're the comeback stock today, and that very clear focus and response from the management over the weekend after their numbers seems to have done a trick for them. TCS I talked about, TCS, Infosys, all of them really even propping up the markets to this extent. I want to pull up Nifty contributors for you, because if it was not for a TCS over there, you would perhaps have even more of a pain. Yes, Kotak Mahindra has come in 25 points, but it's the heavyweights, the TCS and Infis, which are really holding up the market today. A Reliance in a bit of pain also has dampened the mood. SBI, of course, sulking with the rest of the PSU banks. So that's the broad story here as far as the Nifty and the Sensex goes. But Hersh, individual stocks also seeing very wild swings, I would say, and a lot of it because of numbers, results.
Well, yes, plenty of numbers to talk about, and that's and as well as stock-specific action, which is probably keeping a lot of these stocks in focus. Let me first off start with something like a Paytm. Change of CFO, 5% down on that one on lower circuit. Britannia, I'd like to just pull up from a perspective that Tamanna spoke about it, but that one on the positive is up 6%. LIC, Titan, Zentech, three different reasons. LIC, possibly a government stake sale coming to the fore. There was news on Friday itself, but 4% down, no other essential news coming out post that. So my guess is it's that pain coming through where LIC is concerned. Where Titan, Zentech are concerned, Titan margin compression, 12.5% was the margin expectation, come in sub 10. That's the concern. Zentech too, when you're looking at the numbers, not looking bright from a margin perspective, a slight bit decline on the margin count. Let's pull up something like a Tata Tech. Growth was sluggish, in fact largely flat, and therefore that one too down roughly 3.5% in trade. Carborundum also in focus. If I can also on the back and look at that 6% move on Carborundum, a strong set of numbers. But let's also pull up something like all the power financiers, an REC, a PFC, even something like an IREDA if we can. as well as if we can focus on the PSU pack, because the regulations with regard to project financing, draft regulations being disclosed by the RBI, and therefore you're seeing a clutch of stocks under a lot of pressure. Let's pull up something like an SBI, a Canara Bank. There you go, an SBI, a Canara Bank, a PNB, all of which are under pressure as well. Look at the pressure on PNB, nearly 7% down. Let's pull up something like an Angel One as well. Again, numbers and Godrej Prop, well, a strong set of numbers from there. Commentary also very solid. Car Trade, of course, disclosed numbers today. Again, a strong set there. So on the back of numbers, some of these are buzzing. Angel One, of course, monthly update, but Godrej Properties and Car Trade on the back of Q4 numbers. Back to you.
You have quite a bit of movement to mark out today. I would just also talk about an MRPL. And MRPL also facing the brunt of profit booking today in markets, doing fairly badly. And a Canara Bank is the other one, along with all of that entire pack that Hersh also spoke about. I just want to pull up the India VIX as well, because even while we talk about profit booking and commentary around corporate results, the fact is that India VIX has also sort of spiked, and you're seeing that bit of nervousness, I would say, in the market right now. Himain Kapadia joining us this afternoon. Himain, always great to have you on the show. Let me begin with getting your take on the Bank Nifty and the Nifty. Now, we knew that the resistance levels were, at the higher end at 22,800. You've not come anywhere close to that, but still holding up at least around 22,400. What would be your position on a Nifty and a Bank Nifty right now?
A very good afternoon, Tamanna. Thank you for having me on the show. It's always a pleasure. I just digress just a wee bit. You just mentioned, Tamanna, the VIX. The market is not going to survive if the VIX is going to be at 16.68. Yes, elections are coming up. Traditionally, just before the election results, we see the VIX climbing, and it's not going to let equities breathe. In the US, the VIX has come up from 21 to 13.5, and here the VIX has been steadily climbing. So the VIX is going nowhere, and the market is not going to trend. Coming back to Nifty levels, Tamanna, we've been in this range between 22,300 and 22,769. But if I have to round it up, 22,300, 22,800. I've been here for the last 10 trading sessions or so. We haven't gone nowhere. Very clear that we need to take out 22,769. We made 4 attempts at doing that. Every time one felt that yes, we are finally through, it's not yet happened. And now the VIX at this level, I don't think that happens. Either the VIX goes down or the market goes down. The chances of the market going down are more, frankly speaking. Or at least even if it doesn't go down, it's going to remain in a range volatile without a trending bias. So 22,300. Yes, if 22,300 breaks, Tamanna, there would be a spot of bother. If the Bank Nifty, okay, it's relatively different, but that's mainly because of a skewed move. HDFC and Kotak Bank haven't moved for 4 years, Tamanna, and that's a long time, very long time. 48,636 is the level I would watch out for in terms of supports. If parity has to be restored as far as Bank Nifty is concerned, we need to take out 49,057. And then 49,500. Doesn't look as if it's going anywhere. It doesn't look as if it's going to go down much. And just one more thing, Tamanna. I think Hersh, I know you mentioned FMCG, IT. I take them as defensives. If they are doing well, it's clear that the market doesn't want to go anywhere. And like you mentioned, nobody wants to take a risk, Tamanna.
Nobody wants to take. I wouldn't say FMCG. That's more a Britannia story. There's something else going on in Britannia. I'm not sure what, because the numbers are okay, to say the least. I mean, Hersh was pointing out that at least their margins have come in at the higher level of their band, but does it deserve a 7% spike up? I'm not very sure. IT definitely is up, and Himain, like you said, that's possibly a defensive play. Just a quick word on a Britannia this afternoon. What's going on there, and what would you do with that?
Well, you don't see Britannia doing what it does yesterday on a normal day, Tamanna. This is strange, weird. It's like witnessing an UFO. But having said that, it's gone nowhere. been down for some 20 to 23 weeks in a row, Tamanna. And frankly speaking, deeply oversold. Now, the FMCG Nifty index is also deeply oversold, has formed a base, but specifically Britannia, and the volume is huge, 25 lakhs cash market volume, and we still have an hour to go, Tamanna. That's huge. I think volumes are at a 2-year high, if I'm not wrong. So currently, 4950 needs to hold. I don't think this madness can continue. Sanity will have to prevail. But after such a protracted decline, I believe that the gains should hold, not in the same vein, but yeah, worst is over for the time being. We formed a short-term base and probably a medium-term base also, Tamanna. So I wouldn't chase the stock, but I don't think it breaks 4950 now after such volumes.
Okay, Hemen, Hersh also joining in. Hemen, just with regard to other FMCG, anything changes with regard to other FMCG players? Will the focus therefore shift? You're quite confident with regard to Britannia, so I just want to try and understand that perspective.
Absolutely, Hersh. If you can just have a perusal of the Nifty FMCG index, Hersh, I think it looks okay. FMCG has gone nowhere. It hasn't gone in the last 4 months, but it formed a base, Hersh. 52,400 and 54,800. We've been in this range for almost 12 weeks or so, Hersh. Now, this means a base has been formed. The mechanical indicators are slowly turning positive, and stocks are popping up like popcorn. Now, it's Britannia today. It was Dabur a few days back. Godrej Consumer doesn't look bad. Hindustan Unilever is bottoming out. Marico is looking better. So, frankly speaking, the entire FMCG pack, though hasn't done much, but one isn't going to go down. If it's not going to go down, it's forming a base. And after the base, the move is going to be up. So, I would be slightly reticent in going the whole hog here. But a base has been formed, and a significant base over a couple of months. So I would say FMCG is going to recover. I'm not saying it's a tearaway, runaway rally, but yes, I think, okay, Britannia may be the one-off, but there are a whole bunch of other stocks which seem to synchronize that a move on the FMCG is happening. Maybe not a big move, but yes, the performance where it was in doldrums, not doing anything, is going to be in the past tense, at least for the next few weeks, Hersh.
Just to add one thing, and what has come out of the earnings con call, where the management's talked about how they've started to gain market share in the biscuits category. Cheese has grown at double-digit growth. And also, this quote by Varun Berry, where he's talking about how FY25 will be a year of top-line growth. We are willing to sacrifice margins slightly to build a future-ready business. I found that a very interesting sort of comment. But anyway, the street has looked at it quite positively. Hemen, HUL also not having a bad day at all today, isn't it? So you talked about Marico, but that entire pack is doing relatively okay.
Absolutely, Tamanna. In fact, you picked out a nice stock. HUL has formed a short-term bottom. It's most probably forming a medium-term bottom also. Not much to lose. It's down for 22 weeks. High of 2660, low of 2180. Worst is over. Nothing much to lose. Positive divergence. There's a turnaround. About 2280, we'll see more momentum coming in. 2200 is something which doesn't look like being breached. 2170, 2200 is a very strong support base. So nothing to lose, lots to gain. Risk-reward ratio is in favor. HUL is on a technical turnaround.
Okay, HUL on a technical turnaround. Hemen, your calls while we are at it.
Okay, I'll go with the easy one. Infosys. It's fallen off a cliff, frankly speaking. It's been down for 3 months in a row, Hersh. So nothing much to lose. IT turning. Infosys is showing relative strength. So a buy on Infosys at 1430, stop loss 1400, target 1490. Most of the indicators on the daily chart have turned positive after reflecting positive divergence. Volumes have spiked around 2 crores on the day it posted a bottom. Those levels have held. So logic says stronger hands have bought. Weaker hands would have bought. We'd have already broken those levels. So it's on a recovery, not a rally, but seems like a stable move. And I think the whole IT sector would mimic Infosys. Though TCS looks stronger, my pick is Infosys. Secondly, a buy call on Jubilant FoodWorks. Now, Jubilant has, been down once again, like for 5 months in a row. Stability is coming. We formed a base. We just overcome the 55-day exponential moving average. The daily mechanical indicators are in a buy mode. Volume has spiked, and the script has also formed a higher top, higher bottom on the weekly chart. So 4 or 5 technical reasons why there is a buy call on Jubilant FoodWorks. Hersh, buy at 470, stop loss 450, target is 500.
Jubilant FoodWorks and Infosys on Himen's radar. I wonder if Kotak is as well. Just before I get Himen's view, Harsh, this is now a story that you've been covering very closely, especially over the weekend. And what I found interesting, apart from, of course, the clutch of brokerage notes that have set Kotak for the kind of massive performance, is that yes, the results are good. Everyone's happy with it. The question is, does the overhang of regulatory action as well as top tier exit, is that now looking like it's ending? And why the kind of confidence that the Kotak management will be able to convince the regulator to lift the restrictions soon enough?
So, Tamanna, the very divergent views with regard to where a couple of these points are concerned. The management itself is, start off with that. Management itself very confident that there's enough depth in terms of management, not concerned or bothered. They're saying this is regular business, business as usual. Nothing changes for them. Where the IT embargo due to IT shortages is concerned, they are saying that they're going to reprioritize and focus in and make sure that they get business back to usual as quickly as possible. So they're taking that very, very seriously.
But how is the question?
By ensuring that in the next 2 months they address all the IT shortages which the RBI has pointed out. That's the timeline they've set internally as of now. Maybe things change is what they've suggested. And even going forward, of course, after that there'll be an audit. So it's a long drawn process. It's not going to run away in a jiffy, and they're not going to get an approval very, very quickly. But nonetheless, that's how they believe they are going to resolve it. There is someone like a JP Morgan, extremely bullish. 34% upside is what they are giving to current price. They believe that valuations have now become very, very reasonable for Kotak. And they've elaborated with regard to how they believe 16% EPS compounding is reasonable to expect from a franchise like this. Outside of that, you have also a Nuvama, extremely cautious. They believe that there are more question marks and uncertainties rather than answers.
And they talk about one-offs in the balance sheet, which don't make them so bullish on the results either.
Yeah, so this time around there have been quite a few one-offs. But nonetheless, the results were a beat to estimates, to most estimates. That there is no doubt, even excluding the one-offs. So that there is no doubt on. But what they believe is the uncertainty and the overhang is what makes them cautious. And they've given a target price of 1530. So,
which is way Kotak has blown past it.
Yes.
That target price.
Yes, but as of today morning, it was very close to that target price.
So that target price is now a history because it was today morning. On the charts, I know you mentioned Kotak briefly, Himen. But, you talked about it in the context of performing after a while. Do you think that there is a further upside here? Would you accumulate at this point?
Frankly speaking, Tamanna, Kotak has done a Houdini act as far as technical is concerned. 1550 was crucial. And I can't tell you how important it was. Because the last time we were at 1550 was in November 2020. And we have not closed below this level since September 20. So, frankly speaking, it just hung on by the skin of its teeth. And now what we're seeing is a recovery, not a rally. So if 1550 would have broken, I think all hell would have broken loose. But okay, now that's not happened. That in the past tense. And the strange thing is we've almost formed the island reversal. Not exactly. So we've seen a reversal. A short-term bottom has been made. A bounce back is underway. There was a bearish gap, there's a bullish gap. It could have been an island reversal, but there's overlapping. So technically, it's not, but it almost is. So a short-term view is that the worst is over for Kotak as from a shorter-term point of view. Medium-term, I think it's got a long way to go. If I look at the long-term charts, there is nothing which is compelling. Yeah, short-term, everything is now on the mend. Things are looking better. You'll have to wait for some time and price to see how things pan out. But the short-term picture has definitely, it's been a major support and a reversal of sorts, Tamanna, today.
I like that line. Kotak has done a Houdini when it comes to the charts. And definitely there's been a positive surprise. Very quick break. Stay on. We're talking about Titan. When we come back after the break, we're talking about Godrej Properties and a lot of the other movers and shakers this afternoon. Stay tuned.
Welcome back. You're watching India Market Close here on NDTV Profit. Thanks for staying tuned. Let me also welcome on board Abhay Agarwal, founder, Piper Serica. Talk to us about, of course, all that we've been discussing and more. Welcome to NDTV Profit, sir.
Thank you for having me on the show. Good afternoon to you.
Good afternoon. So, Abhay, talk to us. We were chatting just before the break with regard to Kotak, with regard to Britannia. But let me come to Kotak first, try and get in your views. How do you look at this entire evolving situation at Kotak, as well as with regard to valuations? Would you call this a buying opportunity?
Yeah, I think this is a topic that I have covered in the recent past also. I'm not going to comment on the recent price collapse and then the uptick today, which I think is news flow driven and results driven. But looking beyond that, I think as a bank, and again, this is not a buy or sell recommendation. We do not have the stock in our portfolio. It has this work cut out for itself, especially in a situation where it trades at a pretty hefty multiple when you compare it to what global leading banks trade at. When you trade at a book value multiple of 2.5, almost 3 times, and analysts have always had a higher price target on you. You have always been on a buy list of all leading analysts. I think misses like these, which are very basic, that you cannot make your IT structure work to prevent or to protect your customers from digital fraud, I think raises a lot of questions about the management's commitment to customers, smaller customers especially. So while the bank is doing a fabulous job on the corporate banking side and has one of the industry best credit quality ratios and growth in book ratios, on the liability side, I think especially on the protection of their customers through digital means, this is something that RBI has been pointed out. If you read the latest letter from RBI, it talks about a 2-year period that RBI has been engaged with them, and still they haven't been able to figure it out. I think there's a lot of work that is cut out for Kotak Bank to do and to prove, not by saying that they will do it, but actually do it. So I think a lot of investors, while they will welcome the recent results, even though they have a lot of one-offs, but I think for the confidence of investors to come back in an environment where people are questioning high valuations, I think the bank will need to deliver on what RBI has asked it to do.
Abhay, good afternoon. Tamanna here, and it's an interesting take on Kotak on a day when the market seems to be cheering the comments from the management. So their approach seems to be that we spend more than anyone else on tech. We will continue to spend more, and that should sort the problem. They've given themselves a deadline of 2 to 3 months. That's what they've said publicly in their press conference. Do you think that's feasible?
Yeah, I don't think, first of all, going by, I would argue with the management that, look, by telling us there is a number that 10% you're spending on digital, that doesn't mean much. I mean, if you're spending that much, then why are there still problems? In fact, I would go to the extent that NBFCs or fintech companies are also being spared by RBI. Why did RBI have to pinpoint you? So it's not about how much you're spending, Tamanna. What I would like to see is they are actually doing, because if I'm a customer of Kotak Bank, I can see what is going on. I can see the problems that come up often on. So whether it's 2-3 months, it may be 5-6 months, it doesn't matter. I would like to see it actually play out. And I think the bank has the management capability, the wherewithal to do it, to do much better than what is expected of them. So it is a big question mark for me and other investments, that why haven't they done it? So I really hope that they do it in 2-3 months, even if not 2-3 months, in 4-5 months, but they take it as a challenge to become the industry benchmark for digital banking and and customer protection. That would be absolutely great.
This is an issue that HDFC faced a few years ago, and they had to really work hard to, get on top of it. But Abhay, the entire space is in focus today because of RBI's proposed guidelines as well on project financing. And that was a bit of a very sharp reaction from especially an REC, PFC. We should pull those stocks up. They've been hammered all through the day. PSU banks suffered because obviously more exposure to project financing than the private banks. I just wanted to understand your assessment. Now, first of all, these are proposed guidelines, so we'll have to wait for them to actually come into place. Yes, the sort of provisioning that they see for these kind of loans has been upped sharply, but it will be graded. So it's currently 0.4%. There is some time before you get to 5%. There's some conditionality there. Do you see this as such a big negative? And would you say that the response we've seen in the markets today is justified?
No, I think the markets are overreacting in that overreaction zone, Tamanna, frankly, that we are so close to big events. Volatility is higher than normal. Any bad news is extrapolated to mean very, very bad news. If there is good news, frankly, the markets are not rewarding it as much as they should, because a lot of it is already priced in. So I think what we are seeing in the in the markets right now, the mood is that if some stock or sector is overbought, investors are happy to get a reason right now to lighten their weight in that sector. And I think the sector that is bearing the brunt today, which is REC, PFC, IREDA, PSU banks, the large PSU banks especially, is exactly that. That, if you read RBI's circular, is not that dramatic. It's not at all detrimental to any of the lenders' financial health. All it says is that, look, guys, we are getting into probably a tough credit cycle. So let's be prudent and in a graded manner, increase your general provisioning, not even specific provisioning, just general provisioning, increase it so that if your dues are delayed, you have sufficient cover. You don't suddenly have a big impact on your net worth at one time or in one quarter. So let's phase it out. I think there's just prudent banking that RBI has advised everybody. And it's not a line item in the P&L as far as I can understand. It's a balance sheet item. What it will do is it will definitely impact the valuation multiples. And I think that is the core problem. And that is the reaction we're seeing today, Tamanna, that REC 1 year back used to trade at 0.7 times book value. Today it is at 2.5 times book value. PFC has also, quadrupled in its book value multiple. And you see a lot of PSU banks, IREDA trades at 7 times book value multiple. So if the net worth, and reading RBI circular, the net worth will definitely be impacted by 8 to 10 to 12% over 3 years, then the valuation multiples will definitely drop. So if from 2.5, it may go down to 2 times. So I think that readjustment will take place in the market for some of these stocks. So investors who are looking to buy now should definitely be a little cautious that we may be getting into a zone where a lot of these high multiples that have spiked over 1 year without earnings really supporting them are open to readjustment downwards. So that is my caution to investors. But other than that, I don't see any negative impact in the long-term business model. I expect these companies to continue their AUM for next 5-10 years.
Abhay, also, do you believe that there could be some adjustment with regard to pricing that some of these companies will do? Because you'll see some of the lenders maybe stop participating in project finance or reduce their participation in project finance as a result of this. Do you therefore believe that the residual ones, something like an REC PFC, where they have very little to no choice but to do project finance in a big way, will actually benefit because their pricing will therefore improve? Is that an angle that one should explore?
I think it's early days to say that. So first part, what you said is absolutely correct, and I should have mentioned that RBI's clear mandate is to say that, look, project financing is a big lender's game. They don't want small banks, they don't want small NBFCs playing in there just to improve their AUM. So that minimum 10% of consortium size for large project finance projects, which can range from 2,000 crores to 20,000 crores or 50,000 crores, means that you have to be a large enough lender, whether a bank or a PFC, REC kind of lender. You have to be large NBFC or bank to be part of a consortium now. So you can't be a small player. So RBI has kind of de-risked that, the smaller lenders away from them. Now, what it does to pricing, arguably you can say that yes, the supply will reduce because the small guy is out of the system. But frankly, these small lenders who had less than 10% share in the consortium never had any pricing say. They were just given an option to join the consortium at what the leaders of the consortium decided. So to that extent, I don't think any of these lenders would try to increase the pricing by saying that, look, some small guys have gone out, it's only us, so you need to pay us more. I don't think that will happen. But I think early days, it's an interesting point that you made, that to protect margins and to provide for higher risk coverage, would the rates go up? I hope not, but they may, if the banks decide they want to work with the same NIM.
All right. Thank you so much, Abhay, for joining us today. Always a pleasure to have you on the show, and such a clear perspective on both the important issues, Kotak Mahindra Bank as well as these RBI project financing guidelines, which have spooked the market. You've seen the sharpest reaction in those three stocks, PFC, REC and IREDA. I think it's what we should quickly pull up before we go into a very quick break. So that's really been the big impact there. Short break, but on the other side, we're joined by Pace 360's Amit Goyal. We're also going to be talking about what you can expect from Dr. Reddy's ahead of its Q4 numbers. So all that and more after this very, very tiny break.
Welcome back. You're watching India Market Close here on NDTV Profit. I want to first take it across to Himen with regard to charts. Himen, we discussed PFC, REC, some PSU banks, all of which are under pressure. Quick views on charts with regard to some of these names. Anything that stands out for you and what one should do?
Well, they've all gone berserk over the last few months. So, I mean, maybe they needed an excuse to correct, whether it's PFC, REC, or most of the PSU banks. But I don't believe the story is yet over. Okay, it's a knee-jerk reaction. I don't think the trend changes because we remain safely ensconced in a longer-term uptrend. What could happen is that something like a PFC has gone from 80 to 480 back to 350, back above 485, and now we're cooling off. So if we don't take out the recent high in the next 4 or 5 trading sessions, what could happen? We could slip into an intermediate correction. It's a large range between 350 on the downside, 475 on the upside. So currently it's a no man's land. I would prefer to stay away, wait for the volatility to cool off. If it comes closer to 370, I think then it quantifies as a contra buy. I don't think the trend has changed. Yes, maybe it could involve a slightly longer period of consolidation, but then the way it's moved, I think that would just make it healthier. Hersh.
G. Chokalang Lingam also joins us now, founder and MD at Economics Research. Choka, very good afternoon, and great to have you here with us. I'm going to get your very quick take on real estate right now. We've talked in detail about banks, we've talked in detail about REC, PFC, but what do you reckon is going on with the Godrej properties? What do you reckon is going on with the reality index? And I ask this because if you look at the Godrej property numbers, the pre-sale numbers are good, but the rest is, I don't know if it really deserves this kind of an up move. What do you reckon is the story there?
No, certainly, I agree with you. One can't agree with this kind of up move, and it happens for Godrej properties quite frequently also. The valuation company is not there, but some of these real estate companies have a very low retail float on the market. So we observe a lot of correlation between a very low retail float and the market valuation, P multiple or EV to EBITDA. So very low is the retail float, very high is the market valuation, and that happens invariably in real estate stock. I believe that this could be an opportunity to book profit because, as I said, valuation company is not there, and they have rallied a lot. And 3, the FIs are continuously selling. I firmly believe that till the new government is formed, the FIs would continue to sell. They don't mind buying at a premium of 5-10% post the government formation, but on the eve of such a general election, they always sit on sideline. So therefore, that would give more nervousness to retail investors as well. And hence, I think the weakness in the market may continue at least for another 2-3 weeks. So therefore, I would sell this kind of real estate stocks.
Okay, thank you for those views. In fact, the entire realty pack doing fairly well in trade today. Even something like a Brigade, Prestige, Sobha, all of which are buzzing up and away in trade. But it's time for F&O Qs. Agam standing by as always. Agam, what are Qs suggesting?
Right, well, it's been a quiet day of trade, if you can call it that, but not without the choppiness that we see that we've been used to of late. As far as the Nifty is concerned, we're looking at flattish movements. We've lost out on the 22,500 mark, but at the moment we're also seeing an increase in open interest towards what looked like longs earlier on in the session, but since then we've given up some of those gains. Well, moving on to the Bank Nifty, that's where we're once again starting to see a little bit more increase in open interest. While the underlying remains flat, which means that we cannot determine whether or not this is at the moment towards longs or shorts. But even as we move into the next few weeks, the next phase of the election, the next leg of earnings, I reckon there is some amount of position building coming through on account of that. As far as your option market is concerned, let's pull up how things are panning out there. Well, we saw the Nifty consolidate around 22,500, 22,600, and that's exactly where we've seen these respective calls and puts being written around these two strikes. Of course, we've also seen a little bit of unwinding as far as the 22,700 put is concerned, but that at the moment is a little bit out of the picture. This is your overall open interest distribution picture. You have max OI in 22,800 call. This is something which hasn't changed since morning. And of course, on the lower end, we continue to see a higher amount of open interest around all the way to the 22,000 put mark. And well, this is a rough range you can work with as we move into this week's expiry. And finally, coming down to stocks, let's talk about all those which are seeing an increase in OI. Britannia is moving up around 7%. We're looking at longs there, longs for Alchem Laboratories as well. On the other hand, a lot of weakness in Titan, PNB, as well as Gujarat Gas, looking at, some amount of weakness coming in. And of course, among stocks which are seeing unwinding coming through, a lot of long unwinding for REC. Remember, we did see a sharp up move in the 3 previous sessions. And following that, of course, we're seeing a little bit of weakness there. Also about a short covering for something like a Godrej Properties, Havells, as well as Persistent Systems. Godrej Properties, I reckon, won't just be short covering. There will be a lot of fresh longs as well, given the kind of sharp up move that we've seen. All in all, more gainers than losers. And of course, we continue to keep an eye on indices, which are expected to remain choppy over the course of the next few weeks.
Absolutely. So choppy sort of afternoon session, and we're going to start in a bit on what exactly the reasons are with Amit Goel. But just before that, Himen, I wanted to take from you on Titan. Usually post numbers, you do see a bit of a reaction in Titan, but not to this extent negatively. On the charts, what would you do next?
There's been a big distribution pattern, Tamanna. Okay, the trigger was provided by the results, but if you see, we formed a rounding top on the weekly chart, which is basically a bearish pattern, and this has been going on, Tamanna, for the last 4 months or so. So we formed a distribution pattern. The level was 3,500. Very strong support. We bounced from it 1, 2, 3, 4, 5 times, and finally we broke through on the downside. So frankly speaking, it was wanting to do this, and now it's done that. So until we come back and close about 3,500, things are going to be in a flux. Maybe there could be some more downside, and a near-term small bounce cannot be ruled out. But the medium-term picture has taken a hit, and I don't think it's going to turn around in a jiffy.
All right, Amit Goel is with us in our studios today. He's co-founder and chief global strategist, Space 360. Amit, great to have you in our studios at NDTV Profit.
Thank you for having me on, Tamanna.
Yeah. All right. So let's begin with your overview, sort of what's happening in the markets right now. We were talking briefly in the break, Amit, about how global cues don't look too bad. They've gotten over their fear of will he, won't he, Powell cut. Your Indian elections are largely priced in towards policy continuity. What are the reasons for the jitters that we've been seeing in the last few sessions?
Right. A few reasons, Tamanna. Firstly, I think the global macros, if you look in the rear view mirror, then things actually look pretty good. But if you were to look in the front view mirror, I reckon that there is this sense which is coming into the markets that the economic data is no longer as robust as it used to be. And we look at this among the plethora of data points that we look at. US Economic Surprises Index has seen one of its sharpest down move from plus 60 levels to minus 10 levels in the last 4 weeks. And that's a very, very sharp down move. So whether it is retail spending, that is looking very iffy. The fiscal impulse is going to be negative in US because there is so much of awareness about the fact that US fiscal deficit is way, way above what it should be. So the fiscal impulse is negative. The monetary impulse is still negative in the world with interest rates as high in US and with quantitative tightening still going on in US. the economic data is beginning to slow down. You do not see that in the equity markets in US because of the fact that the people had become a way too risk averse getting into the result season. So there has been a little bounce, but more importantly, the bond yields have come down because of the softening US data. So that has given sort of a lease of hope to the equity markets in US. But if you look at the front view mirror, we clearly see signs of a big slowdown emerging in US. I think starting from this quarter, we are actually looking at US either being in the negative territory for GDP growth or maybe in the sub 1%. So this is going to be discounted over the next few weeks and months to come. So global macros, is not looking good at all if you look at what's going to happen in the next 15 to 18 months. Even from the Indian standpoint, one of the reasons behind the jitters is because we track the probabilities of the election outcomes very, very closely, getting into every major election, not just in India, but across the world. And in India, a few weeks back, the expected number that was coming in from the bookies and the trading that goes on in the Indian election outcome, 325 was the BJP number that was sort of we were hearing till about 2 to 3 weeks back, and that number has sort of slightly moved down to 315. Now that doesn't change who the next prime minister is going to be or who the next ruling party is going to be.
That you're referring to the BJP number or the NDA number?
No, I'm actually talking about the BJP number.
Okay, so
that has sort of slightly moved down in the last 2 weeks. So directionally, it is not looking great, even though in an absolute sense, they are still way above the 50% mark. Yeah. So there is still not much doubt about who the next PM or who the next ruling party is going to be. But it's just that the environment which was looking so sanguine till a few weeks back is looking somewhat less sanguine. And when markets are when they are priced to perfection the way they have been, even these little bit of jitters either coming from the US macro data or from little bit of geopolitical or political headwinds can easily shave off, let's say, about 1 or 2 percentage points from the market at any point. And I would also like to mention here that the small cap and mid cap space in India plus the micro cap space, that is looking more vulnerable than the large cap space, again because of the sheer euphoria there, the kind of inflows that we've seen and the valuations. They do not give us any room for comfort.
Sure, Amit. So on the global side, if I can come in to try and understand, would you therefore be long bonds? Would debt be the way to go at this point? What should one do as an investor?
Excellent, Hersh. So absolutely, long-term bonds is the way to go as far as we can see. So we are long India bonds right up to 2053 and even 2063 Government of India bonds. So that is how bullish we are on duration in India. But even more than India, we are bullish on the US government bonds because we've got products in India, we've got products globally. So we have been buying US 20 and 30-year government bonds, and we believe because the kind of run-up that we've seen in the US bond yields is way higher than the run-up that you've seen in the India bond yields. So over the next 18 months, we are looking at a slowdown and a recession in the world led by US and Europe and also China, which would mean that the inflation numbers go down. When inflation numbers go down, the central banks start cutting interest rates, and you would see a massive flow of money into long-term bonds. I can tell you that last 2 years, the long-term bonds in US have had the worst time in last 300 years. That's the kind of bear market you've seen in government bonds, long-term government bonds in US, and of course even in UK. I think over the next 15 to 18 months, a lot of that is going to reverse, and long-term government bonds could become a great asset class in India, in US, in Germany, and in so many parts of the world.
Sure, Amit. Amit, also, just with regard to the triggers, we've seen a decent-ish cool off when it comes to inflation, especially global inflation. It's come off. Of course, there's still some way to go, and every opportunity the Fed gets, they keep reiterating that. But what would those triggers be? What would those triggers be which you would look out for to believe that there is that inflection point where you stop buying debt and start switching over to equity? What are those key triggers?
Yeah. So Hersh, we are looking at a protracted global slowdown over the next 3 years. It's not going to be a blink and you miss it kind of a low economic phase. This is, in my opinion, from whatever we've studied over last 500 years of capitalistic history, this could be a protracted economic slowdown, because of which the equity markets could be in sort of, in a downward mode for a few years, but that doesn't mean that there would not be any opportunities in the equity space. So we have been playing bear market rallies in every single bear market in last 3 decades, and I can safely tell you that there are going to be some amazing opportunities, because when the pendulum swings from extreme euphoria to extreme panic and the positions are squared up and longs are liquidated, you get some amazing entry points. So we were extremely bullish on equities last year, October, when the markets came down because of rising bond yields, and in March last year when the markets came down because of the banking crisis in US and Europe.
Yeah.
So there are going to be many such opportunities where we would be buying.
Amit, three. And I don't know if they brief you. You can look at us when you're talking to us in the studio, Amit.
Okay. Oh,
the cameras will catch you. Okay. It's a fun chat we're having.
Sure.
So you're saying lots of opportunities. Name 3 in the Indian markets. If the more specific you go, the better for our viewers.
Are you talking in terms of specific stocks?
Preferably, if not, then sectors.
Okay, so where we are in the economic cycle for India and for the world in general, we would not want to buy materials. We would not want to buy any company which has got high operating leverage. So autos is a no-no, manufacturing is a no-no, materials is a no-no. So what is in our comfort zone is, let's say, solid PSU banks, because we believe there is going to be an NPA cycle, but it's not beginning yet. There could be some time before the next NPA cycle bites. So which would mean the likes of State Bank of India with a P ratio of, let's say, about 11-12, the likes of Kotak Bank, the likes of HDFC Bank could be great buys. We like oil marketing companies because they are still trading at 5 or 6 P ratios, and they are going to be making a lot of money over the next few years, because diesel may be a fuel of the past, but petrol is not going anywhere in the next 5 to 7, 8 years. So we like oil marketing companies, we like some of these utility plays, we like PSU banks, we like some low value, low P ratio private sector banks. So that's the space we like. We are in the we want to catch stocks where the earning yields are great, where the dividend yields are possibly good, but we do not want stocks which are high on the operating leverage, because that's where the maximum damage is going to happen.
Small and mid cap, the kind of small cap run up you've seen so far. Did you have a chance to participate in it, book profits? Would you stay away?
We did participate in it, let's say last year, March. But they moved out of our comfort zone sometime in August, September of last year. And since then, we've confined ourselves to large caps. So we missed out. I'm not saying it was a great decision in hindsight.
Yeah.
We have missed out on a run-up in the small cap and mid cap. But I would do that because I think the kind of price damage and the kind of time correction that could happen in that space is going to be pretty damaging. So I would rather miss out on the last 10, 15 percentage points of the bull run than risk getting caught with the bag at the wrong time when the music stops, and then see my holdings go down in terms of price and time.
That's the trickiest bit, figuring out where the music stops in the Indian markets. If you listen to some, it's an ongoing party, definitely. But different view from you, Amit. So great to have you today. We're just a few minutes from close. So sure. I'm going to wrap it up and, just get last calls on BTST. But welcome back anytime. Amit Goyal there in our studios today. Hemant, let me come to you on the BTST call as we wind down towards a bit of a sad close in terms of where we started. Not anything too damaging on the Nifty. It's the IT story that's completely held up. What would be your top 2 BTST or STBT calls?
I think I'd have a BTST on Dabur, Tamanna, because IT, FMCG, IT, okay, lever has already moved since we spoke, Tamanna. So BTST on Dabur is around 531. One can buy at 530, 5 rupees stop loss, 10 rupee target, a BTST. Intraday small consolidation. a move upside seems to be on the anvil tomorrow, Tamanna.
All right, Dabur is the one that you like. Just quickly, Choka, your take on Marico. Numbers are just out. Maybe a little below estimates. And Titan, we took the technical call on Titan, not quite the fundamental call. Does it deserve the beating it's getting today?
I think it deserves much more than that because I looked at the performance. With the 5% year-on-year profit growth, the stock is trading at the 84 trailing PE. I don't think the company deserves this kind of trailing PE unless one is convinced that it's a one-off event for Q4 performance.
Okay, so when you say it deserves much more of a beating, I assume you're talking about Titan, Choka?
Yeah, Titan, yeah.
Okay.
It has posted just a 5% year-on-year profit growth in Q4, whereas on a trailing basis it's trading at 84 PE. I think, with a single-digit profit growth, it doesn't deserve 84 PE. It could be somewhere around 55 to 60 range at best.
Marico, any sort of quick first cut because I asked you that as well?
I haven't looked at the results.
Okay, fair.
And Mr. Chokalingam, while we are at it, Britannia, any views on that one? And also, I want to squeeze in one more quick piece. Titan, do you expect things to get better if gold prices actually start to come off, which they have?
That could give some inventory benefit, but then generally in the medium to long term, they work on the margin basis. They have to, consider a hike or fall in the gold price in their pricing. So I don't think they're going to gain much. As far as Britannia is concerned, I looked at the results, a little disappointing, but the fabulous thing is that out of 88 rupees EPS, they have given 73 rupees 50 paisa dividend, which is about 83% of the payout. And also, I hope that with good monsoon, the wheat output could improve. That could lessen the pressure on the raw material cost for Britannia. So considering these two, and also considering the recent correction in the stock price, still it is 10-15% down from 52-week high. So considering all these facts, I would give a buy call on Britannia.
Mr. Chokalingam, last quick word with regard to MRPL. Your views, because the stock taking an absolute knock, almost 8.5% lower now.
I suggest entering it maybe another 5-10% because it has extreme volatility in both stock prices and quarterly performance. So one can wait. In any case, I am quite negative on small and mid cap till June first week. So therefore, I would stay away from MRP.
Much. Choka, great to have you on the show. Hemin, good to see you as always. Just a couple of minutes left, actually less than a minute and a half left as we wind down the market close today. Let's start with a heat map and see if anything has significantly changed there. This is just tepid. The Nifty 50 not really moving. The story really is on both ends. Titan, what a drubbing. I just to reiterate, in case you missed in the last 2-3 minutes when we asked G. Chokalingam, did Titan deserve this? 7% down. And he said they deserved much more. So that's been an ouch sort of an afternoon for Titan. The concern is their margins, their valuations also not supporting the kind of growth that has been seen. So it's all about the numbers in that sense. Britannia, what a fabulous run up. The management has promised a double-digit volume growth, promised as in they have projected a double-digit volume growth. The street has liked it, has rewarded it richly. In fact, helping a Britannia even outpace a Kotak Mahindra Bank right in the end as markets closed down. Britannia, great numbers. Kotak Mahindra Bank, very good numbers. TCS, having a fabulous day. Possibly the dipping of the bond yields in the US is positive for all IT companies and for TCS as well. And that's doing well. If I look at the FMCG space, the HUL stock today perhaps piggybacking on what we're seeing in a Britannia. I just want to quickly pull up Marico as well, because if I'm looking at that entire space and the numbers just came in shortly before, Marico not bad at all. Can we just pull up the line graph to get a sense of whether there has been a positive response to the numbers which came in a short while ago? And yes, there has been. You can see that uptick there post the numbers. So FMCG, an interesting space to watch out for today. Real estate, I would say, is the other one, isn't it, Hersh? In terms of the indices, PSU banks got the drubbing because of the RBI's proposed regulations.
Yes.
Abhay Agarwal, spoke to us and said that maybe a bit of an overreaction. And on the other hand, realty up 3% for no clear reason.
Absolutely. Some positive commentary, of course, coming in from Godrej Prop, but outside of that, 2.6% is very, very healthy. And that uptick continues in realty. It's doing very well in trade, but also IT was up 1% in trade today. The broader markets, if we can try and pull that up, towards the end, maybe some amount of negativity where the mid cap and small caps are concerned. We did see some more pressure, 0.6% lower for the Nifty mid cap. 1+% lower for the Nifty small cap, and if we can have the advanced decline just to close things off, to kind of see where we've closed in the last half an hour, the pressure has continued largely where we were. Some names, if we can pull up, let's see where a Paytm has closed, especially in the financials pack. M&M Financial, where that one has closed in at, well, lower circuit for Paytm clearly. M&M Financial down 3%.
REC PFC. Let's look at what's happened to
we
REC
can pull those up.
So this is not as bad as it was at one point in the day. If you were to believe it, both REC PFC doing really terribly. Reda, the third in that pack actually. All of them impacted because of the RBI guidelines, and that would be interesting to see if that persists tomorrow. That's one that I would watch out for.
Yes, absolutely. On the positive side, some numbers. Of course, Britannia, we spoke about that. Also, quickly on to something like a Carborandum. Of course, margins expanded, and within the broader market segment, that's one stock that really stood out, 5% higher on an otherwise very weak day of trade.
Car trade, let's just quickly see what's happening with car trade.
That one too, nearly 9%
another big
higher.
mover towards the end because of the numbers, 8% up on a car trade. So all in all, I would say a bit of nervousness in the market, all things considered. Is this because in the middle of elections, maybe those jitters are coming in, a bit of profit